Joining us now for a further look at what's playing itself out at that market scene is Chantal Marx from FNB Wealth Investments. Chantal, a pleasure and a happy Friday to you.
Happy Friday to you as well, and the market playing along quite nicely with the SA Inc stable really driving markets today. It's always great to see, especially on a Friday.
Absolutely. It has been quite a week though, wasn't it? We saw a rather volatile week also in the Rand there. Let's talk about the week that was and just then, of course, us seeing these upbeat screens this Friday afternoon.
So I think the week was a pushing and pulling between bulls and bears and hawks and doves as it relates to US interest rate policy. So, I mean, we've had some data out of the US that doesn't look too great again. That spooked markets yesterday to a certain extent. But investors are also looking forward to Powell's speech at Jackson Hole later today. And they're hoping that he'll kind of not confirm, but imply that September rate hike is definitely happening. And I think that there's also hope that September rate hike could be bigger than expected. I think that's probably a little bit too optimistic, but we'll see how the market reacts. I think that once we get that clarity at least, or at least some clarity in terms of policy projection, we could see that volatility fade a little bit.
Let's also touch on, the FOMC minutes that came out this week and what he could possibly say, Chantal, that's not in those minutes. Because sometimes I think we're looking for clues from clues on the back of other clues.
Yes, that summarizes it perfectly, because they can't really go outright and say this will definitely happen, because things can happen between when a policy decision is made and communicated and when they actually have to guide towards what that policy decision is going to be. So I think that the only thing that can really come out tonight is if they changed their thinking because of data that came up, which I don't think is going to be the case. And as I mentioned, what investors are really hoping for is perhaps guidance on what the size of the rate hike could be. For now, the market is pricing in 25 basis points, but through the end of the year, they're looking for 100. There's only 3 meetings by the FOMC this year, which means one of those cuts has to be bigger than 25 basis points. And I think that that's where most of the emphasis is going to be. You could see a slight repricing if Powell says something like they don't foresee large rate cuts. But yeah, I mean, that's basically the only thing I think that investors can garner from this speech specifically.
Hope we're not setting ourselves up here for more unnecessary volatility, Chantal. I also want to speak about Japan, an interesting one there. They're in a different place in their interest rate cycle here. We do see, the Bank of Japan's governor there say that he desires to lift rates. Let's talk about that and how it does play into the global story.
Yeah, so I was looking at that earlier today as well, and it is remarkable how different their situation is to the rest of the world. Japan is desperately trying to increase rates, or they really want to increase rates, because they've been in a below zero rate regime for ages and only exited that regime earlier this year, where the rest of the world in a post-COVID kind of supply side crunch were forced to hike rates quite substantially because of runaway inflation. The reason why Japan didn't have to hike rates is because they've been battling deflation, and they were actually wanting to get some inflation into the system. They finally have some inflation in the system, and they are now more confident to hike rates to bring themselves out of that kind of that zero or below zero rate regime. So they hiked rates a few weeks ago. You'll remember the chaos that ensued in terms of the yen dollar cross and the carry trade there that unwind, the Nikkei falling by 14% in one day. They want to avoid something like that again. So I think that their guidance has to be on point. And that is probably why the governor said, we will only hike rates when we feel like it won't have as big an impact again. They'll watch financial markets more carefully this time. And I think it could be a while before we see them hike again.
Very interesting indeed. I want to get into some company news today. We've got both Grin Rod and Goldfields out today. markets didn't like something about these updates because both these stocks are in the red. Grin Rod down more than 5%, Goldfields down more than 4%. Maybe let's start with a Grin Rod. It has been a rather flat half year, but this is a company that was doing well when many companies actually weren't.
Absolutely. So they had the very successful expansion into Mozambique through the Maputo terminal, and it's been performing exceptionally well. Their concession has also been expanded, but they are also operating in South Africa in the context of a very constrained logistics sector and some real issues at the South African ports. I think they've actually navigated it quite well. I reckon that the market was a little bit negative around the results because the earnings number was a bit worse than expected. But that was a function of higher debt, higher interest rates, and that higher debt was a function of increased capital expenditure to actually fuel growth in the years ahead. So I'm not too concerned about this result. I think that there's still a lot of opportunity there. They're bringing 13 locomotives back from Sierra Leone to South Africa to benefit from private sector involvement in railway. And I think it's probably a pretty good opportunity to get involved in Grin Rod. You may see the next few reporting periods still being quite wishy-washy, but I think if you take a long-term approach, this company still has a lot of growth ahead of it.
And then let's talk about Goldfields. What we're actually seeing with gold miners is some of them have managed to benefit from that high gold price. Not all of them, and I think Goldfields is certainly one of those.
Yeah, so Goldfields has been quite disappointing. They have a massive mine that they're developing over in South America, and there have been delays in bringing that mine online. So when the market was looking at Goldfields a few years ago, it by far had the best growth trajectory in terms of ounces mined from the other guys listed in South Africa. So a lot of optimism was baked into the share price because of that future growth that was coming through. And now that these delays are taking place and Goldfields are saying, wait, we won't be able to produce as much as we thought we were going to produce in this next financial year, investors are worried. They guided to such, but we've also seen some pressure in some of their other big mines, notably South Deep, that's right here in South Africa, really struggling and disappointing the market. For a gold miner to benefit from high gold prices, they need to be producing a lot of gold, and the share price needs to, for the share price to appreciate, it mustn't run ahead of the ounces that it's able to produce or that rand gold price. So I think Goldfields, the ounces is really the issue for Goldfields. The other gold miners, I think, from a South African perspective, look a lot better. I would say that Harmony has run very, very hard, but some of the other ones I think still offer value.
Brilliant, Chantal. I want to get into our stock pick segment now, but first let's take a look at counters that have found favor with industry peers.
It's in the US, and it's a retailer called Target. They sort of do a lot of things, whether it be personal beauty, whether it be food, whether it would be appliances. So just one of those retail giants in the US. Since the pandemic, they've underperformed severely if you measure them against things like Walmart. They came out with results very recently, a couple of days ago. So this is an early take on that, but for the first time in a number of years, they managed to increase revenue. They have discounted prices, which pushed up revenue, and they've increased margins. Any company that can do an increase in turnover and margins, that flows through to income and cash.
I'm buying MTN, business whose share price has really been under pressure over the last year. And the reason for that is that they're the largest telecom operator in Nigeria, and Nigeria's had terrible currency devaluation. We think that devaluation of the Naira is going to be more in line with inflation going forward, so less than 20% a year, let's say. And that means that the earnings out of Nigeria in the MTN group can start to improve now and to grow. So that's one part of the business, which I think is now bottomed and the headwinds are behind them.
I'm going to go with the Absa Group. They came out with results, and I think generally they guided the market that they were not going to be great. We know they're quite exposed to the middle income market. Yeah, so their earnings have disappointed, but if I look a year out, I think, they will restore. We're very confident that rates are going to be cut. We believe that the SARB is going to follow the Fed, but you've seen South African inflation data supportive of rate cuts here. So I think that they'll be operating in a very different environment in 6 months' time.
All right, Chantal, keen to get your thoughts on some of those. MTN, ABSA, and Target.
Yes, what an interesting mix. So I'll start with MTN. I also think that MTN has been kind of beaten down a little bit too much. From a Naira perspective, the Naira will probably continue to depreciate over time. It's naturally a weakening currency. But I think the extent of Naira weakness that we saw the last year or so won't necessarily be repeated over the next 3 years. Never say never with the Naira. But I think that you should start seeing some stability there. And interesting thing with the contracts in Nigeria with the tower providers, they used to be denominated in US dollars, which means that MTN was earning a Naira income and paying their costs in dollars. It's now Naira based. So that should make a very big difference if something like that happens again. From an ABSA perspective, I think that the leadership changes is a little bit worrying, but I absolutely agree that the stock is quite cheap. And then when we look at value and discount retail in the US, I also think it's a very interesting place to be. I think for now, especially when we look at where the US consumer is, they could do quite well relative to some of the other consumer names over in the US.
And Chantal, which counter are you going with today?
So I am looking for South African SA Inc. value. We've seen some of these counters rally quite hard, but poor City Lodge has been left in the wake of the rest of SA Inc. City Lodge playing in that tourism and hospitality space. We know that tourism is firing in South Africa, both domestically and internationally. I think the way that they've changed their offering from being for the business traveler to really focusing on grabbing that leisure traveler is quite a positive thing. And the share price has just gone absolutely nowhere over the last year. So I think at some point, probably when they release results, investors will take note. And I think currently we're at a very good entry point, both from a short and longer term perspective.
Well, Chantal, thank you for wrapping the week up for us. It's always a pleasure having you here on Business Lunch. That was your midday markets update with FNB's Chantal Marx.